Hey guys, welcome back to the Reminiscences of the Stock Operator audiobook. Chapter 5 and 6 may not look that significant and important to you if you're a brand new trader. However, in the words of our hero, the trader himself, Mr. Livingston, the main character in the book, he believes that these lessons learned in these very chapters is what finally separated him from being an ordinary trader and took him to the entire new level of his trading career. These two chapters will deal with some very profound topics, like making sure that you're not taking profits too early, when to buy the dips and when not to buy them, how to sit tight with your position, how not to lose your position and the importance of that, trading during the market reversals, understanding that charts is a definite plus, especially if you know how to read them. Studying the stock behavior and trusting your decisions is definitely more important than listening to those that are not doing those things and taking tips from them. Ultimately, as a trader, you have to believe in your ability to make great decisions and being able to stay with those decisions. Guys, bring a pen and paper, take some notes. I truly hope that the messages in these two chapters will help you propel your trading career to the next level. If you have any questions about trading stocks, options, guys, take advantage of this. Click the links below. Schedule a 20-minute complimentary coaching session about trading stocks and options. Get all your questions answered so you can trade with more clarity and make this year and next year your best trading years ever. Enjoy the audiobook.
Chapter 5. The average ticker hound, or as they used to call him, tapeworm, goes wrong, I suspect, as much from over-speculation as from anything else. It means a highly expensive inelasticity. After all, the game of speculation isn't all mathematics or set rules, however rigid the main laws may be. Even in my tape reading, something enters that is more than mere arithmetic. There is what I call the behavior of a stock, actions that enable you to judge whether or not it is going to proceed in accordance with the precedents that your observation has noted. If a stock doesn't act right, don't touch it, because being unable to tell precisely what is wrong, you cannot tell which way it is going. No diagnosis, no prognosis. No prognosis, no profit. It is a very old thing, this of noting the behavior of a stock and studying its past performances. When I first came to New York, there was a broker's office where a Frenchman used to talk about his chart. At first I thought he was a sort of pet freak, kept by the firm because they were good-natured. Then I learned that he was a persuasive and most impressive talker. He said that the only thing that didn't lie, because it simply couldn't, was mathematics. By means of his curves, he could forecast market movements. Also, he could analyze them and tell, for instance, why Keene did the right thing in his famous Atchison preferred bull manipulation, and later why he went wrong in his Southern Pacific pool. At various times, one or another of the professional traders tried the Frenchman system, and then went back to their old unscientific methods of making a living. Their hit or miss system was cheaper, they said. I heard that the Frenchman said Keene admitted that the chart was 100% right, but claimed that the method was too slow for practical use in an active market. Then there was one office where a chart of the daily movement of prices was kept. It showed at a glance just what each stock had done for months. By comparing individual curves with the general market curve and keeping in mind certain rules, the customers could tell whether the stock on which they got an unscientific tip to buy was fairly entitled to a rise. They used the chart as a sort of complimentary tipster. Today, there are scores of commission houses where you find trading charts. They come ready-made from the offices of statistical experts and include not only stocks, but commodities. I should say that a chart helps those who can read it, or rather who can assimilate what they read. The average chart reader, however, is apt to become obsessed with the notion that the dips and peaks and primary and secondary movements are all there is to stock speculation. If he pushes his confidence to its logical limit, he is bound to go broke. There is an extremely able man, a former partner of a well-known stock exchange house, who is really a trained mathematician. He's a graduate of a famous technical school. He devised charts based upon a very careful and minute study of the behavior of prices in many markets: stocks, bonds, grain, cotton, money, and so on. He went back years and years and traced the correlations and seasonal movements. Oh, everything. He used his charts in his stock trading for years. What he really did was to take advantage of some highly intelligent averaging. They tell me he won regularly until the World War knocked all precedents into a cocked hat. I heard that he and his large following lost millions before they desisted. But not even a world war can keep the stock market from being a bull market when conditions are bullish, or a bear market when conditions are bearish. And all a man needs to know to make money is to appraise conditions. I didn't mean to get off the track like that, but I can't help it when I think of my first few years in Wall Street. I now know what I did not know then, and I think of the mistakes of my ignorance, because those are the very mistakes that the average stock speculator makes year in and year out. After I got back to New York to try for the third time to beat the market in a stock exchange house, I traded quite actively. I didn't expect to do as well as I did in the bucket shops, but I thought that after a while I would be able to do much better, because I would be able to swing a much heavier line. Yet I can see now that my main trouble was my failure to grasp the vital difference between stock gambling and stock speculation. Still, by reason of my 7 years' experience in reading the tape and a certain natural aptitude for the game, my stake was earning not indeed a fortune, but a very high rate of interest. I won and lost as before, but I was winning on balance. The more I made, the more I spent. This is the usual experience with most men. No, not necessarily with easy money pickers, but with every human being who is not a slave of the hoarding instinct. Some men, like old Russell Sage, have the money-making and the money-hoarding instinct equally well developed. And of course, they die disgustingly rich. The game of beating the market exclusively interested me from 10 to 3 every day, and after 3, the game of living life. Don't misunderstand me. I never allowed pleasure to interfere with business. When I lost, it was because I was wrong, and not because I was suffering from dissipation or excesses. There never were any shattered nerves or rum-shaken limbs to spoil my game. I couldn't afford anything that kept me from feeling physically and mentally fit. Even now, I'm usually in bed by 10. As a young man, I never kept late hours, because I could not do business properly on insufficient sleep. I was doing better than breaking even, and that is why I didn't think there was any need to deprive myself of the good things of life. The market was always there to supply them. I was acquiring the confidence that comes to a man from a professionally dispassionate attitude toward his own method of providing bread and butter for himself. The first change I made in my play was in the matter of time. I couldn't wait for the sure thing to come along and then take a point or two out of it, as I could in the bucket shops. I had to start much earlier if I wanted to catch the move in Fullerton's office. In other words, I had to study what was going to happen, to anticipate stock movements. That sounds asininely commonplace, but you know what I mean. It was the change in my own attitude toward the game that was of supreme importance to me. It taught me little by little the essential difference between betting on fluctuations and anticipating inevitable advances and declines, between gambling and speculating. I had to go back further than an hour in my studies of the market, which was something I never would have learned to do in the biggest bucket shop in the world. I interested myself in trade reports and railroad earnings and financial and commercial statistics. Of course, I love to trade heavily, and they call me the boy plunger. But I also like to study the moves. I never thought that anything was irksome if it helped me to trade more intelligently. Before I can solve a problem, I must state it to myself. When I think I have found the solution, I must prove I am right. I know of only one way to prove it, and that is with my own money. Slow as my progress seems now, I suppose I learned as fast as I possibly could, considering that I was making money on balance. If I had lost more often, perhaps it might have spurred me to more continuous study. I certainly would have had more mistakes to spot, but I'm not sure of the exact value of losing. For if I had lost more, I would have lacked the money to test out the improvements in my methods of trading. Studying my winning plays in Fullerton's office, I discovered that although I often was 100% right on the market, that is, in my diagnosis of conditions and general trend, I was not making as much money as my market tightness entitled me to. Why wasn't I? There was as much to learn from partial victory as from defeat. For instance, I had been bullish from the very start of a bull market, and I had backed my opinion by buying stocks. An advance followed, as I had clearly foreseen. So far, all very well, but what else did I do? Why, I listened to the elder statesman and curbed my youthful impetuousness. I made up my mind to be wise and play carefully, conservatively. Everybody knew that the way to do that was to take profits and buy back your stocks on reactions. And that is precisely what I did, or rather what I tried to do. For I often took profits and waited for a reaction that never came. And I saw my stock go kiting up 10 points more, and I sitting there with my 4-point profit safe in my conservative pocket. They say you never grow poor taking profits. No, you don't. But neither do you grow rich taking a 4-point profit in a bull market. Where I should have made $20,000, I made $2,000. That was what my conservatism did for me. About the time I discovered what a small percentage of what I should have made I was getting, I discovered something else. And that is that suckers differ among themselves according to the degree of experience. The tyro knows nothing, and everybody, including himself, knows it. But the next or second grade thinks he knows a great deal, and makes others feel that way too. He is the experienced sucker, who has studied not the market itself, but a few remarks about the market made by a still higher grade of suckers. The second grade sucker knows how to keep from losing his money in some of the ways that get the raw beginner. It is this semi-sucker, rather than the 100% article, who is the real all-the-year-round support of the commission houses. He lasts about 3.5 years on an average, as compared with a single season of from 3 to 30 weeks, which is the usual Wall Street life of a first-time offender. It is naturally the semi-sucker who is always quoting the famous trading aphorisms and the various rules of the game. He knows all the don'ts that ever fell from the oracular lips of the old stagers, excepting the principal one, which is, don't be a sucker. This semi-sucker is the type that thinks he has cut his wisdom teeth because he loves to buy on declines. He waits for them. He measures his bargains by the number of points it has sold off from the top. In big bull markets, the plain, unadulterated sucker, utterly ignorant of rules and precedents, buys blindly because he hopes blindly. He makes most of the money until one of the healthy reactions takes it away from him at one fell swoop. But the careful Mike sucker does what I did when I thought I was playing the game intelligently, according to the intelligence of others. I knew I needed to change my bucket shop methods, and I thought I was solving my problem with any change, particularly one that essayed high gold values according to the experienced traders among the customers. Most, let us call them customers, are alike. You find very few who can truthfully say that Wall Street doesn't owe them money. In Fullerton's, there were the usual crowd, all grades. Well, there was one old chap who was not like the others. To begin with, he was a much older man. Another thing was that he never volunteered advice, and never bragged of his winnings. He was a great hand for listening, very attentively to the others. He did not seem very keen to get tips. That is, he never asked the talkers what they'd heard or what they knew. But when somebody gave him one, he always thanked the tipster very politely. Sometimes he thanked the tipster again when the tip turned out okay. But if it went wrong, he never whined, so that nobody could tell whether he followed it or let it slide by. It was a legend of the office that the old jigger was rich and could swing quite a line, but he wasn't donating much to the firm in the way of commissions, at least not that anyone could see. His name was Partridge, but they nicknamed him Turkey behind his back, because he was so thick-chested and had a habit of strutting about the various rooms, with the point of his chin resting on his breast. The customers, who were all eager to be shoved and forced into doing things, so as to lay the blame for failure on others, used to go to old Partridge and tell him what some friend of an insider had advised them to do in a certain stock. They would tell him what they had not done with the tip, so he would tell them what they ought to do. But whether the tip they had was to buy or to sell, the old chap's answer was always the same. The customer would finish the tale of his perplexity and then ask, "What do you think I ought to do?" Old Turkey would cock his head to one side, contemplate his fellow customer with a fatherly smile, and finally he would say very impressively, "You know, it's a bull market." Time and again I heard him say, "Well, this is a bull market, you know," as though he were giving to you a priceless talisman, wrapped up in $1 million accident insurance policy. And, of course, I did not get his meaning. One day, a fellow named Elmer Harwood rushed into the office, wrote out an order, and gave it to the clerk. Then he rushed over to where Mr. Partridge was listening politely to John Fanning's story of the time he overheard Keene give an order to one of his brokers, and all that John made was a measly 3 points on 100 shares. And, of course, the stock had to go up 24 points in 3 days right after John sold out. It was at least the 4th time that John had told him that tale of woe. But Old Turkey was smiling, as sympathetically as if it was the first time he heard it. Well, Elmer made for the old man, and without a word of apology to John Fanning, told Turkey, "Mr. Partridge, I have just sold my Climax Motors. My people say the market is entitled to a reaction, and that I'll be able to buy it back cheaper. So you'd better do likewise. That is, if you've still got yours." Elmer looked suspiciously at the man to whom he had given the original tip to buy. The amateur or gratuitous tipster always thinks he owns the receiver of his tip, body and soul, even before he knows how the tip is going to turn out. "Yes, Mr. Harwood, I still have it, of course," said Turkey gratefully. It was nice of Elmer to think of the old chap. "Well, now is the time to take your profit and get in again on the next dip," said Elmer, as if he had just made out the deposit slip for the old man. Failing to perceive enthusiastic gratitude in the beneficiary's face, Elmer went on, "I've just sold every share I own." From his voice and manner, you would have conservatively estimated it at 10,000 shares. But Mr. Partridge shook his head regretfully and whined, No, I can't do that." "What?" yelled Elmer. "I simply can't," said Mr. Partridge. He was in great trouble. "Didn't I give you the tip to buy it?" "You did, Mr. Harwood, and I'm very grateful to you. Indeed I am, sir. But, hold on, let me talk. And didn't that stock go up 7 points in 10 days, didn't it?" "It did, and I'm much obliged to you, my dear boy. But I couldn't think of selling that stock." "You couldn't?" asked Elmer, beginning to look doubtful himself. It is a habit with most tip givers to be tip takers. "No, I couldn't." "Why not?" And Elmer drew nearer. "Why, this is a bull market." The old fellow said it as though he had given a long and detailed explanation. "That's all right," said Elmer, looking angry because of his disappointment. "I know this is a bull market as well as you do, but you'd better slip them that stock of yours and buy it back on the reaction. You might as well reduce the cost to yourself." "My dear boy," said Old Partridge, in great distress, "my dear boy, if I sold that stock now, I'd lose my position, and then where would I be?" Elmer Harwood threw up his hands, shook his head, and walked over to me to get sympathy. "Can you beat it?" he asked me in a stage whisper. "I ask you." I didn't say anything, so he went on. "I give him a tip on Climax Motors. He buys 500 shares. He's got 7 points profit, and I advise him to get out and buy them back on the reaction that's overdue even now. And what does he say when I tell him? He says that if he sells, he'll lose his job. What do you know about that?" "I beg your pardon, Mr. Harwood. I didn't say I'd lose my job," cut in Old Turkey. "I said I'd lose my position. And when you're as old as I am and you've been through as many booms and panics as I have, you'll know that to lose your position is something nobody can afford, not even John D. Rockefeller. I hope the stock reacts and that you will be able to repurchase your line at a substantial concession, sir. But I myself can only trade in accordance with the experience of many years. I paid a high price for it, and I don't feel like throwing away a second tuition fee. But I am as much obliged to you as if I had the money in the bank. It's a bull market, you know." And he strutted away, leaving Elmer dazed. What old Mr. Partridge said did not mean much to me until I began to think about my own numerous failures to make as much money as I ought to, when I was so right on the general market. The more I studied, the more I realized how wise that old chap was. He had evidently suffered from the same defect in his young days, and knew his own human weaknesses. He would not lay himself open to a temptation that experience had taught him was hard to resist, and had always proved expensive to him, as it was to me. I think it was a long step forward in my trading education when I realized at last that when old Mr. Partridge kept on telling the other customers, "Well, you know this is a bull market," he really meant to tell them that the big money was not in the individual fluctuations, but in the main movements. That is, not in reading the tape, but in sizing up the entire market and its trend. And right here, let me say one thing. After spending many years in Wall Street and after making and losing millions of dollars, I want to tell you this. It never was my thinking that made the big money for me. It always was my sitting. Got that? My sitting tight. It is no trick at all to be right on the market. You always find lots of early bulls and bull markets and early bears and bear markets. I've known many men who were right at exactly the right time and began buying and selling stocks when prices were at the very level which should show the greatest profit. And their experience invariably matched mine. That is, they made no real money out of it. Men who can both be right and sit tight are uncommon. I found it one of the hardest things to learn. But it is only after a stock operator has firmly grasped this that he can make big money. It is literally true that millions come easier to a trader after he knows how to trade than hundreds did in the days of his ignorance. The reason is that a man may see straight and clearly and yet become impatient or doubtful when the market takes its time about doing as he figured it must do. That is why so many men in Wall Street who are not at all in the sucker class, not even in the third grade, nevertheless lose money. The market does not beat them. They beat themselves. Because though they have brains, they cannot sit tight. Old Turkey was dead right in doing and saying what he did. He had not only the courage of his convictions, but the intelligent patience to sit tight. Disregarding the big swing and trying to jump in and out was fatal to me. Nobody can catch all the fluctuations. In a bull market, your game is to buy and hold until you believe that the bull market is near its end. To do this, you must study general conditions and not tips or special factors affecting individual stocks. Then get out of all your stocks. Get out for keeps. Wait until you see, or if you prefer, until you think you see the turn of the market, the beginning of a reversal of general conditions. You have to use your brains and your vision to do this. Otherwise, my advice would be as idiotic as to tell you to buy cheap and sell dear. One of the most helpful things that anybody can learn is to give up trying to catch the last eighth or the first. These two are the most expensive eighths in the world. They have cost stock traders, in the aggregate, even millions of dollars to build a concrete highway across the continent. Another thing I noticed in studying my plays in Fullerton's office after I began to trade less unintelligently was that my initial operations seldom showed me a loss. That naturally made me decide to start big. It gave me confidence in my own judgment before I allowed it to be vitiated by the advice of others, or even by my own impatience at times. Without faith in his own judgment, no man can go very far in this game. That is about all I have learned to study general conditions, to take a position and to stick to it. I can wait without a twinge of impatience. I can see a setback without being shaken, knowing that it is only temporary. I have been short 100,000 shares, and I have seen a big rally coming. I have figured correctly that such a rally as I felt was inevitable, and even wholesome, would make a difference of $1 million in my paper profits. And I nevertheless have stood pat and seen half my paper profit wiped out, without once considering the advisability of covering my shorts to put them out again on the rally. I knew that if I did, I might lose my position, and with it the certainty of a big killing. It is the big swing that makes the big money for you. If I learned all this so slowly, it was because I learned by my mistakes, and some time always elapses between making a mistake and realizing it, and more time between realizing it and exactly determining it. But at the time, I was faring pretty comfortably and was very young, so that I made it up in other ways. Most of my winnings were still made in part through my tape reading, because the kind of markets we were having lent themselves fairly well to my method. I was not losing either as often or as irritatingly as in the beginning of my New York experiences. It wasn't anything to be proud of when you think that I had been broke 3 times in less than 2 years. And as I told you, being broke is a very efficient educational agency. I was not increasing my stake very fast, because I lived up to the handle all the time. I did not deprive myself of many of the things that a fellow of my age and taste would want. I had my own automobile, and I could not see any sense in skimping on living when I was taking it out on the market. The ticker only stopped Sundays and holidays, which was as it should be. Every time I found the reason for a loss or the why and how of another mistake, I added a brand new don't to my schedule of assets. And the nicest way to capitalize my increasing assets was by not cutting down on my living expenses. Of course, I had some amusing experiences, and some that were not so amusing. But if I told them all in detail, I'd never finish. As a matter of fact, the only incidents that I remember without special effort are those that taught me something of definite value to me in my trading. Something that added to my store of knowledge of the game and of myself. Chapter 6. In the spring of 1906, I was in Atlantic City for a short vacation. I was out of stocks and was thinking only of having a change of air and a nice rest. By the way, I had gone back to my first brokers, Harding Brothers, and my account had got to be pretty active. I could swing 3,000 or 4,000 shares. That wasn't much more than I had done in the old Cosmopolitan shop when I was barely 20 years of age. But there was some difference between my 1-point margin in the bucket shop and the margin required by brokers who actually bought or sold stocks from my account on the New York Stock Exchange. You remember the story I told you about that time when I was short 3,500 sugar in the Cosmopolitan, and I had a hunch something was wrong and I'd better close the trade? Well, I have often had that curious feeling. As a rule, I yield to it. But at times, I have poo-pooed the idea and have told myself that it was simply asinine to follow any of these sudden blind impulses to reverse my position. I have ascribed my hunch to a state of nerves resulting from too many cigars, or insufficient sleep, or a torpid liver, or something of that kind. When I have argued myself into disregarding my impulse and have stood pat, I have always had cause to regret it. A dozen instances occur to me when I did not sell as per hunch, and the next day I'd go downtown and the market would be strong, or perhaps even advance. And I tell myself how silly it would have been to obey the blind impulse to sell. But on the following day there would be a pretty bad drop. Something had broken loose somewhere, and I'd have made money by not being so wise and logical. The reason plainly was not physiological, but psychological. I want to tell you only about one of them, because of what it did for me. It happened when I was having that little vacation in Atlantic City in the spring of 1906. I had a friend with me, who also was a customer of Harding Brothers. I had no interest in the market one way or another, and was enjoying my rest. I can always give up trading to play, unless, of course, it's an exceptionally active market, in which my commitments are rather heavy. It was a bull market, as I remember it. The outlook was favorable for general business, and the stock market had slowed down, but the tone was firm, and all indications pointed to higher prices. One morning, after we had breakfast, and had finished reading all the New York morning papers, and had got tired of watching the seagulls picking up clams and flying up with them 20 feet in the air and dropping them on the hard wet sand to open them for their breakfast, my friend and I started up the boardwalk. That was the most exciting thing we did in the daytime. It was not noon yet, and we walked up slowly to kill time and breathe the salt air. Harding Brothers had a branch office on the boardwalk, and we used to drop in every morning and see how they'd opened. It was more force of habit than anything else, for I wasn't doing anything. The market, we found, was strong and active. My friend, who was quite bullish, was carrying a moderate line purchased several points lower. He began to tell me what an obviously wise thing it was to hold stocks for much higher prices. I wasn't paying enough attention to him to take the trouble to agree with him. I was looking over the quotation board, noting the changes. They were mostly advances, until I came to Union Pacific. I got a feeling that I ought to sell it. I can't tell you more. I just felt like selling it. I asked myself why I should feel like that, and I couldn't find any reason whatever for going short of UP. I stared at the last price on the board until I couldn't see any figures, or any board, or anything else for that matter. All I knew was that I wanted to sell Union Pacific, and I couldn't find out why I wanted to. I must have looked queer, for my friend, who was standing alongside of me, suddenly nudged me and asked, "Hey, what's the matter?" "I don't know," I answered. "Going to sleep?" he said. "No," I said, "I'm not going to sleep. What I'm going to do is sell that stock." I had always made money following my hunches. I walked over to the table where there were some black order pads. My friend followed me. I wrote out an order to sell 1,000 Union Pacific at the market and handed it to the manager. He was smiling when I wrote it and when he took it. But when he read the order, he stopped smiling and looked at me. "Is this right?" he asked. But I just looked at him, and he rushed it over to the operator. "What are you doing?" asked my friend. "I'm selling it," I told him. "Selling what?" he yelled at me. If he was a bull, how could I be a bear? Something was wrong. 1,000 UP, I said. Why? He asked me in great excitement. I shook my head, meaning I had no reason. But he must have thought I got a tip, because he took me by the arm and led me outside into the hall, where we could be out of sight and hearing of the other customers and rubbering chair warmers. What did you hear? He asked me. He was quite excited. UP was one of his pets, and he was bullish on it because of its earnings and its prospects. But he was willing to take a bear tip on it at second hand. Nothing, I said. You didn't? He was skeptical and showed it plainly. I didn't hear a thing. Then why in blazes are you selling? I don't know, I told him. I spoke gospel truth. Oh, come across, Larry, he said. He knew it was my habit to know why I traded. I had sold 1,000 shares of Union Pacific. I must have a very good reason to sell that much stock in the face of the strong market. I don't know, I repeated. I just feel that something is going to happen. What's going to happen? I don't know. I can't give you any reason. All I know is that I want to sell that stock and I'm going to let them have another 1,000. I walked back into the office and gave an order to sell a second 1,000. If I was right in selling the first 1,000, I ought to have out a little more. What could possibly happen? Persisted my friend, who couldn't make up his mind to follow my lead. If I told him that I had heard UP was going down, he'd have sold it without asking me from whom I'd heard it or why. What could possibly happen? He asked again. A million things could happen, but I can't promise you that any of them will. I can't give you any reasons, and I can't tell fortunes, I told him. Then you're crazy, he said. Stark crazy, selling that stock without rhyme or reason. You don't know why you want to sell it? I don't know why I want to sell it. I only know that I do want to, I said. I want to, like everything. The urge was so strong that I sold another 1,000. That was too much for my friend. He grabbed me by the arm and said, Here, let's get out of this place before you sell the entire capital stock. I had sold as much as I needed to satisfy my feeling, so I followed him without waiting for a report on the last 2,000 shares. It was a pretty good jag of stock for me to sell, even with the best of reasons. It seemed more than enough to be short of without any reason whatever, particularly when the entire market was so strong, and there was nothing in sight to make anybody think of the bear side. But I remembered that on previous occasions, when I had the same urge to sell and didn't do it, I always had reasons to regret it. I have told some of these stories to friends, and some of Million. And Jim Fisk just looked at him and said, Go ahead, do. Sell it short and invite me to your funeral. Yes, I said, and if that chap had sold it short, look at the killing he would have made. Sell some UP yourself. Not I. I'm the kind that thrives best on not rowing against the wind and tide. On the following day, when fuller reports came in, the market began to slide off, but even then not as violently as it should. Knowing that nothing under the sun could stave off a substantial break, I doubled up and sold 5,000 shares. Oh, by that time it was plain to most people, and my brokers were willing enough. It wasn't reckless of them, or of me, not the way I sized up the market. On the day following, the market began to go for fair. There was the dickens to pay. Of course, I pushed my luck for all it was worth. I doubled up again and sold 10,000 shares more. It was the only play possible. I wasn't thinking of anything except that I was right, 100% right, and that this was a heaven-sent opportunity. It was up to me to take advantage of it. I sold more. Did I think that with such a big line of shorts out, it wouldn't take much of a rally to wipe out my paper profits and possibly my principal? I don't know whether I thought of that or not. But if I did, it didn't carry much weight with me. I wasn't plunging recklessly. I was really playing conservatively. There was nothing that anybody could do to undo the earthquake, was there? They couldn't restore the crumpled buildings overnight, free, gratis, for nothing, could they? All the money in the world couldn't help much in the next few hours, could it? I was not betting blindly. I wasn't a crazy bear. I wasn't drunk with success or thinking that because Frisco was pretty well wiped off the map, the entire country was headed for the scrap heap. No, indeed. I didn't look for a panic. Well, the next day I cleaned up. I made $250,000. It was my biggest winnings up to that time. It was all made in a few days. The street paid no attention to the earthquake the first day or two. They'll tell you that it was because the first dispatches were not so alarming. But I think it was because it took so long to change the point of view of the public toward the securities markets. Even the professional traders, for the most part, were slow and short-sighted. I have no explanation to give you, either scientific or childish. I'm telling you what I did and why, and what came of it. I was much less concerned with the mystery of the hunch than with the fact that I got $250,000 out of it. It meant that I could now swing a much bigger line than ever, if or when the time came for it. That summer I went to Saratoga Springs. It was supposed to be a vacation for me, but I kept an eye on the market. To begin with, I wasn't so tired that it bothered me to think about it. And then everybody I knew up there had or had had an active interest in it. We naturally talked about it. I've noticed that there is quite a difference between talking and trading. Some of these chaps remind you of the bold clerk who talks to his cantankerous employer as to a yellow dog when he tells you about it. Harding Brothers had a branch office in Saratoga. Many of their customers were there, but the real reason, I suppose, was the advertising value. Having a branch office in a resort is simply high-class billboard advertising. I used to drop in and sit around with the rest of the crowd. The manager was a very nice chap from the New York office who was there to give the glad hand to friends and strangers, and if possible, to get business. It was a wonderful place for tips, all kinds of tips, horse race, stock market, and waiters. The office knew I didn't take any, so the manager didn't come and whisper confidentially in my ear what he just got on the QT from the New York office. He simply passed over the telegram saying, "This is what they're sending out," or something of the kind. Of course, I watched the market. With me, to look at the quotation board and to read the signs is one process. My good friend Union Pacific, I noticed, looked like going up. The price was high, but the stock acted as if it were being accumulated. I watched it a couple of days without trading in it. And the more I watched it, the more convinced I became that it was being bought on balance by somebody who was no piker. Somebody who not only had a big bankroll, but knew what was what. Very clever accumulation, I thought. As soon as I was sure of this, I naturally began to buy it, at about 160. It kept on acting all hunky, and so I kept on buying it, 500 shares at a clip. The more I bought, the stronger it got, without any spurt, and I was feeling very comfortable. I couldn't see any reason why that stock shouldn't go up a great deal more, not with what I read on the tape. All of a sudden, the manager came to me and said they got a message from New York. They had a direct wire, of course, asking if I was in the office. And when they answered yes, another came saying, "Keep him there. Tell him Mr. Harding wants to speak to him." I said I'd wait and bought 500 shares more of UP. I couldn't imagine what Harding could have to say to me. I didn't think it was anything about business. My margin was more than ample for what I was buying. Pretty soon the manager came and told me that Mr. Ed Harding wanted me on the long-distance telephone. "Hello, Ed," I said. But he said, "What the devil's the matter with you? Are you crazy?" "Are you?" I said. "What are you doing?" he asked. "What do you mean?" "Buying all that stock." "Why? Isn't my margin all right?" "It isn't a case of margin, but of being a plain sucker." "I don't get you." "Why are you buying all that Union Pacific?" "It's going up," I said. "Going up? Hell, don't you know that the insiders are feeding it out to you? You're just about the easiest mark up there. You'd have more fun losing it on the ponies. Don't let them kid you." "Nobody is kidding me," I told him. "I haven't talked to a soul about it." But he came back at me. "You can't expect a miracle to save you every time you plunge in that stock. Get out while you've still got a chance," he said. "It's a crime to be long of that stock at this level when these high binders are shoveling it out by the ton." "The tape says they're buying it," I insisted. "Larry, I got heart disease when your orders began to come in. For the love of Mike, don't be a sucker. Get out, right away. It's liable to bust wide open any minute. I've done my duty. Goodbye." And he hung up. Ed Harding was a very clever chap. Unusually well-informed and a real friend, disinterested and kind-hearted. And what was even more, I knew he was in a position to hear things. All I had to go by in my purchases of UP was my years of studying the behavior of stocks, and my perception of certain symptoms which experience had taught me usually accompanied a substantial rise. I don't know what happened to me, but I suppose I must have concluded that my tape reading told me the stock was being absorbed simply because very clever manipulation by the insiders made the tape tell a story that wasn't true. Possibly I was impressed by the pains Ed Harding took to stop me from making what he was so sure would be a colossal mistake on my part. Neither his brains nor my motives were to be questioned. Whatever it was that made me decide to follow his advice, I cannot tell you, but follow it I did. I sold out all my Union Pacific. Of course, if it was unwise to be long of it, it was equally unwise not to be short of it. So after I got rid of my long stock, I sold 4,000 shares short. I put out most of it around 162. The next day, the directors of the Union Pacific Company declared a 10% dividend on the stock. At first, nobody in Wall Street believed it. It was too much like the desperate maneuver of cornered gamblers. All the newspapers jumped on the directors. But while the Wall Street talent hesitated to act, the market boiled over. Union Pacific led, and on huge transactions made a new high record price. Some of the room traders made fortunes in an hour, and I remember later hearing about a rather dull-witted specialist who made a mistake that put $350,000 in his pocket. He sold his seat the following week and became a gentleman farmer the following month. Of course, I realized the moment I heard the news of the declaration of that unprecedented 10% dividend that I got what I deserved for disregarding the voice of experience and listening to the voice of a tipster. My own convictions I had set aside for the suspicions of a friend, simply because he was disinterested, and as a rule, knew what he was doing. As soon as I saw Union Pacific making new high records, I said to myself, this is no stock for me to be short of. All I had in the world was up as margin at Harding's office. I was neither cheered nor made stubborn by the knowledge of that fact. What was plain was that I had read the tape accurately, and that I had been a ninny to let Ed Harding shake my own resolution. There was no sense in recriminations, because I had no time to lose, and besides, what's done is done. So I gave an order to take in my shorts. The stock was around 165 when I sent in that order to buy in the 4,000 UP at the market. I had a 3-point loss on it at that figure. Well, my brokers paid 172 and 174 for some of it before they were through. I found when I got my reports that Ed Harding's kindly intentioned interference cost me $40,000. A low price for a man to pay for not having the courage of his own convictions. It was a cheap lesson. I wasn't worried because the tapes had still higher prices. It was an unusual move, and there were no precedents for the action of the directors. But I did this time what I thought I ought to do. As soon as I had given the first order to buy 4,000 shares to cover my shorts, I decided to profit by what the tape indicated, and so I went along. I bought 4,000 shares and held that stock until the next morning. Then I got out. I not only made up the $40,000 I had lost, but about $15,000 besides. If Ed Harding hadn't tried to save me money, I'd have made a killing. But he did a very great service, for it was the lesson of that episode that I firmly believe completed my education as a trader. It was not that all I needed to learn was not to take tips, but follow my own inclination. It was that I gained confidence in myself, and I was able finally to shake off the old method of trading. That Saratoga experience was my last haphazard, hit-or-miss operation. From then on, I began to think of basic conditions instead of individual stocks. I promoted myself to a higher grade in the hard school of speculation. It was a long and difficult step to take,